Hi, I'm Andy. Welcome to my channel. Now, this is your monthly update of the best savings accounts here in the UK, late September 2020, going into October 2020. I do this every 4 weeks, both on my podcast and on my YouTube channel. So you've got an option there where you want to check out this information. In the other weeks, I look at the best current account offers and incentives. Right now, there are a few of these £100, £125 bank switching offers, and also the best credit card incentives, such as cashback on 0% transfers. So they're the other channels. If you want to check out those other episodes, please do. But I say the focus today are on the best savings accounts here in the UK, the ones with the highest paying interest. And I'm focusing here on the easy access accounts. Now, a couple of things it's worth noting since the last episode. One of them is the Bank of England have kept the base rate at 0.1%, that historical low. That means it's very unlikely we're going to see any of the banks increasing their rates as a result. If rates do go up for the Bank of England at some point, maybe they'll increase some of those savings accounts in rates, but it's not happened yet. Possibly still speculation. There may even be negative interest rates at some point. But at the moment, it's staying where it is. The other thing that's really interesting is that the inflation rate, which was announced last week, dropped to 0.2%. That is the lowest in 5 years. Now, that basically means that this kind of box, this kind of basket of different products and expenses that are kind of attractive for a year, they've only gone up by that small amount, 0.2% in the last 12 months. Now, that figure is actually artificially low as well, because a big part of that is the Eat Out to Help Out scheme, bringing down how much we've been paying for food in restaurants and cafes and bars. Really pushing down how much we would normally spend, how much those things would normally cost. But really, they're just getting that money back. Those train prices haven't dropped that significantly. So I wouldn't be surprised if it jumps back up next month. What it has done, bringing that inflation rate down, is suddenly find there are 661 different savings accounts which are suddenly now beating inflation. Now, that's really important when you have savings, that they are getting a rate of interest that's higher than the inflation rate, because anything lower than that, you're losing money in real terms. Your savings are sitting here earning whatever, but then your inflation, the things you're spending money on, they're getting more expensive over here. And really, you want those savings to be level or above, so you're not losing money in those kind of real terms. So at the moment, yes, you think fantastic. Look at all these extra accounts that now are above inflation. But like I said, I think it's going to be very temporary. Inflation will start creeping up again. And those accounts which suddenly now beat inflation, which was at 1% the month before, they'll drop back down. So don't be complacent. Don't suddenly think, right, well, I'll leave my money where it is. You absolutely want to try and move your money to wherever you can get the highest rate of interest. So what I'll do, as I normally do here, I'll just take you through what some of those best rates are right now. Over on the blog, becleverwithyourcash.com, you will find my article where I go through all of these. I update it on a regular basis. Whenever there's a change, I will kind of let you know what those differences are. Now, the top paying ones right now are remaining those regular savers accounts offering 2.75% with First Direct, HSBC and Marks and Spencer's Bank. You can only get these three accounts if you have a current account with those banks. First Direct still isn't open to new customers. That would be existing customers only, but you could open an HSBC account, get that £125 bank switching bonus right now. Well worth thinking about that, and then opening that regular saver or M&S Bank. Now, I know some people do get confused about regular savers, so I do have a whole video and a whole article going into a bit more detail about how they work, why that 2.75% isn't what you'll get on the total amount, is what you get on a monthly basis. I won't go into details of it now because I've got information elsewhere, but that is the highest rate you can get right now. One thing to say, I know this is mainly focused on easy access. Obviously, those regular savers money is kind of locked away for 12 months. So you kind of want to think of it almost as a 12-month fix in lots of ways. Next up, we have the kind of two current accounts which are paying the best interest you can. It's roughly 2%. The Nationwide Flex Direct account, this is my top pick. It pays 2% on $1,500 for 1 year. It's fixed at that rate for 1 year, but it's just a current account, so you can take your money in and out as you need to. You don't have to lock it away for that time. The next one is the Virgin Money account. It pays slightly higher, 2.02%, but it's only on $1,000 and it is a variable rate. So if you're going to go for one of the two, I would go for that Nationwide Flex Direct over the Virgin Money. The only reason you might want to think about it and wait for that Nationwide Flex Direct is because they used to offer a referral scheme offering £100. That stopped when lockdown began. If they bring that back, then maybe you'll be able to get £100 if you're referred to it by somebody else. So you might want to hold out for that. Depends how much money you've got. The Virgin Money is a really good alternative. There's another regular saver which is open to anyone. You don't need a current account with them. That was Coventry Building Society. That only pays 1.55% now. It was 1.85% last time I recorded this, and even a few months before that, it was a lot higher again. So it's still there. It's still one of the highest paying accounts, but it's much further down the list. Really, only if you've got a lot of money, you've already eaten up those other regular savers and those other current accounts. A couple more to think about in terms of if you want more money to spread it around. TSB gives you 1.5% on £1.5 grand. Again, that is a variable rate. It could change at any time, but it's worth considering it if you've already got the Nationwide and the Virgin accounts. And after that, Lloyds Bank. If you are a Club Lloyds Bank customer, you get access to a monthly saver, same thing as a regular saver, offering 1.5%. Again, a couple of months ago, that was offering you 2%. So that has dropped as well. Again, we're seeing a lot of these rates continuing to drop. But again, it's another option you might want to look at. Now, beyond that, if you've got more money, again, these are all about kind of fixed amounts of cash you've got or fixed amounts every month. If you have a large amount of money that you want to put away, there are a couple of options for you. Now, one bank actually was a building society, I should say, Skipton Building Society last week, offered a new 1.2% easy access account which was the best rate we've seen for a good 3 or 4 months, I would say. It closed to new applicants with just a handful of days. It was gone by Friday. So when these things come along, you need to kind of jump on them pretty fast. If you follow me on Twitter or on Instagram @AndyCleverCash, I will let you know as soon as those things happen, if it's in between these videos. And of course, check out that article because that's where I will put those updates as well. So you can always bookmark this and keep checking it out. But social media is probably the best place to find out when those changes happen. So sadly, that came and it went. Now, it is possible to get the equivalent of 1.2% with a Halifax Rewards current account. I wouldn't use it this way, though, personally. The way you get that money, essentially, it's not interest, it's a reward. You get £5 every month, so 60 quid a year. There are 2 ways to get this. One of them is to have £5,000 in your account every day of the month all year to get that full amount. That works out at 1.2%. So if you have £5 and you don't need it and you put it away, you'll get 1.2%, but you've got that flexibility which you don't get with a fixed account that you can use if you want to, but you'll just lose that interest. The other way to get it, though, is to spend £500 on your debit card every single month. I think that is the much, much, much better option. So let's say you use a cashback credit card like I do. You pay it off in full every single month, don't you, to avoid the interest on that credit card. Well, use your Halifax debit card to do that, and you get that reward. So if you're going to open up a Halifax rewards account to get that monthly reward, I use a debit card trick rather than the interest trick, but it's there for completeness if you want to. Really, the place to go to if you've got a lot of money beyond those sort of smaller accounts is an NS&I income bond offering 1.16%. Now, this has a limit of a minimum sort of deposit of £500 and a minimum withdrawal of £500. So we're talking again about large amounts of money, but you are also protected here well beyond the normal financial services compensation scheme protection of 85 grand. If a bank was to go bust, it goes up to £1 million. That's it for this time. I will be back with another one of these in a month's time. But as I say, if you want those updates, do check out the blog and follow me on social media, and I'll let you know what is happening, if any other new accounts come, any changes come along. But make sure whatever you're doing, the whole point is to make sure you have got your money in as high a paying interest account as you can. But absolutely is worth doing it if you are earning anything, I say, below 1%. Make sure you are getting at least that 1% in an NS&I savings account, if not more in all those other accounts. Until next time, cheers. And here are a couple more videos you might find interesting.